All right, I'm gonna give a quick introduction here. First off, thank you everybody that is joining us live here. This is the first real episode and real interview of the Speaking Greeks podcast. It's going to be available on Apple, Google, Amazon, Spotify. So you can, if you ever miss an episode, because they will be at like sporadic times. If you ever miss an episode, they'll always be pushed out to your favorite podcasting platform. So, I guess real quick, the idea of the Speaking Greeks podcast is, again, just to kind of reiterate, was that all of the financial podcasts out there seem to be like institutional driven, and I think retail traders deal with a lot different problems. Not only trading, but there's like the lifestyle aspect of it as well. So, I think it would be very informative for people that are retail traders to learn from other retail traders because, like I said, the issues that we face in the markets are much different than the quant at Goldman Sachs or Bank of America. So, with that being said, my first guess is Ben Decker. He runs Income Option Trading, and he is a mod and admin for a couple different trading Facebook groups. And I'm gonna let him kind of take over here in the beginning and give a brief introduction of himself, maybe some of his favorite strategies, and just kind of an introduction to who is Ben. So go ahead, Ben. You can take over and give us an introduction.
Sounds good.
Sounds
Thanks,
good.
Kurt.
Thanks, Kurt.
So starting off,
Starting off,
oh,
oh,
I hear an
I
echo
hear an
here.
echo here.
Try that again. There we go.
There we go.
Oh, now I hear it
No,
again.
It's
No, I
my
don't.
fault.
No,
I'm gonna have to watch that mute button. Go ahead.
Okay, sounds good. Thanks, Kurt. So my name's Ben. Like Kirk said, I run Income Options Trading. Started trading back in 2017. Got introduced to options actually from Robinhood. Late part of 2017 into 2018. So that's how I got started there. Learned a lot along the way, lost money, made money. Kind of joined the Wall Street bets crowd for a little bit. And now I've kind of settled into doing my own thing, found out what works for me, and mostly now trading the indices. Try to stay away from individual stocks. That's where I lost most of my money, so kind of went away from that.
Okay, and you said you started in 2017, and you're a child of Robinhood.
I had a buddy who kept bugging me to join Robinhood so you can get that free Ford stock. So I finally gave in, and I got that. I don't remember what stock I got, but it was probably Ford at $5 or $6. Thought that was a big deal. Started out with $50 in there buying penny stocks and watching my account go up and down by 20 cents at a time. So that's kind of how I got started. And then they introduced options, so I looked into that a little bit and found out, hey, you could buy an option for $2 and make $1 million. And so I thought that was great. So I spent a lot of time searching the internet and looking at options. Found Option Alpha and tastytrade. Those were very helpful. But starting out, I did what most people do starting out, where you buy one delta calls, one delta puts, whatever, for pennies, trying to make it big, and never did.
So you started your career gambling FDs like all of us, right?
Exactly. Yep. And no, I always tell people, uh, don't start out that way. Be smart and sell premium and don't over leverage, all that good stuff. But I think everyone really needs to try it out, because otherwise you're gonna always think, what if, and you might regret not ever doing that. So I think as long as you keep your gambling section very small. I think there's no issue with buying the 1 penny Microsoft calls.
It's been a while since I've thrown down some bets, but I won't lie. I did get bit by the Bed Bath and Beyond bug over the weekend and did buy a couple long calls earlier this week, but I definitely missed the big run up today though.
Yeah, I was looking at Bed Bath and Beyond. I was looking at some ratio spreads, and I I didn't pull the trigger. I'm glad I did not. Just like I said, I've been trying to trade the indices. I used to do earnings plays because those were exciting. But the problem with earnings trades that I had is you win 4 out of 5 and they're all small, but then you have the Netflix trade that gets blown out and you lost all your gains from the last 20 winners. So I stopped doing that too.
When did you start when did you start like selling premium and going like the option or selling options side, like the theta gang type of angle to your trading strategy?
Sure. So I'd say I did a little bit in 2018. That's when I learned the majority of just about options and the Greeks and that kind of thing. Um, I did a lot of spreads just because my account was quite small. I think so. I started about $50. I think my wife let me have in there trading penny stocks, and then I learned about options and spreads. And I said, "Hey, can I put $200 in?" And she said yes. So I was doing a lot of 50 cent wide spreads starting out, um, both credit and debit spreads. So I guess that was kind of my first uh, taste of the Theta Gang. Um, kind of funny story. The first stock that I sold a put on because I was very bullish on was Enphase Energy, which is ENPH. I sold a $5 put, and it got down to around the $4 mark, and so I closed it. And I think now Enphase Energy is like a $200 stock. So I could have got assigned the 100 shares and then just kept it, but I closed out of it and I got scared.
I think we all have stories like that. Okay, so my foray into trading was like a short version is I would trade Tesla and it was on Robinhood, and every time it would go like above $300, I'd sell it, and anytime it went 300, I bought it. And then one day I just decided to hold on to it. And then I got introduced to options and was selling covered calls, and then the split happened, and and I was raking in premium, but eventually they got called away, and I don't even want, and then like now they have a 5-to-1 split coming up, I think next week. And like, I refuse to do the math of the opportunity cost, I guess I should say. Um, so you said though that, so you got introduced to Robinhood by a friend trying to bait you with like the free stock. Did you have any interest in the markets like prior to that?
Not a whole lot. My dad had um, he was an investor, so I knew about the markets. Also, at my first job, I got a HSA and through Fidelity, and there you could invest the funds. So that was actually where I bought my first mutual fund, I guess. So that was back in 2014, 2015 ish. But that was just kind of set and forget, don't ever look at it sort of deal. Um, but my dad's an accountant, so I I kind of had a financial background, nothing formal education, but growing up with him, learned about money in the stock market.
Right. So my next question was actually going to be, when did you convert yourself from like an investor to a trader? Like I guess what was the turning point? And it was the introduction to Robinhood and the gamification of the market.
It totally was. Yep, the options and with Robinhood, it was so easy and the commission free thing. So it was easy to buy and sell every other day. And it's like I said, a gamification, and the confetti comes down, when you put on a trade, and um, so kind of the excitement of going in and out of the market and trading different underlines, instead of just buying the spiders and watching it for 10 years.
So what brokerage are you still at Robinhood?
No, I've transferred out of Robinhood. I'm now 99% in Tastyworks, and 1% in Thinkorswim, and that 1% is just so I can uh, keep using their platform for charting.
Was there like a triggering event that caused like that I guess was the catalyst of the convert or like the I'm sorry. Was there a catalyst to the transfer to leave Robinhood and move to Tasty?
So for me, it was the platform being built for option traders. It's just a lot easier to uh, move options around on the fly, and buy and sell very quickly, um, compared to Robinhood on your phone. So it was more so just the platform itself being more option trader user friendly.
Right, built for traders by traders, right?
Right.
So whenever you pick Tastyworks, did you find Tasty Trade first and kind of use them as like your educational ground and then just kind of naturally went into Tastyworks, or did you find like the Tasty Trade? For those who don't know, Tasty Trade is Tastyworks is like educational arms. They do a ton of back testing and research and analysis, and they do have some good info out there. But I see a lot of people. I recommend Tasty Trade to a lot of people that are interested in learning. So, and then there's like a natural progression towards Tastyworks. Was that the same for you?
Yeah, it was. And I did also open up a Thinkorswim. So kind of on my journey, I first found Option Alpha, and that's where I learned most of the basics, um, just about options. And they use Thinkorswim, so I opened up a Thinkorswim account there, paper traded, and at the same time found Tasty Trade, um, like their daily podcast with all the information that they provide, and obviously they have Tastyworks, so I opened up an account there, and so I had both of them, um, and I just liked the Tastyworks platform better. It seemed like it was more updated. Thinkorswim kind of seems like it's still 90s ish, but
Yeah.
it's a great platform.
Yeah, Thinkorswim, I think, is going to suffer from just bloat and old age. It's written in Java, which is kind of generally considered in like a older language, and there's just so much to it that it's going to be if Schwab decides to do any kind of overhaul, rewriting Thinkorswim, I feel like they're definitely going to leave someone wanting more. Like they're definitely going to cut out like a subset of people because there's just so many features. There's no way that they're going to rewrite and be able to include all of their users again. But like eventually that's just going to be something that they're going to have to come across.
Yep, exactly. And one thing I like about Thinkorswim is there's so many more uh, order options, conditional orders and different types of stops. You can set it on the bid, the mark, or the ask, stuff like that. So Thinkorswim, I would say, is more flexible than Tastyworks, and that I feel like part of that is because Thinkorswim has just been out there for so much longer.
Yeah, and I think as people needed features and requested them, they were probably added in and just kind of grew into this behemoth. And I think that's how I landed at Thinkorswim too. I was running iron flies with a conditional trigger on break even, and it was the only broker I could that would offer that. So that's what I ran. Um, Speaking of iron flies, not to get it too technical or into the mechanics of anything, but do you want to touch on like what your favorite strategies are, like kind of how what's your like day to day like as a trader?
Sure. So day to day, so I have a full time job. I'm not a full time trader, so my day usually consists of opening 0 DTE iron condors very close to the market open, setting stops, and then walking away, basically. I've found that if I overtrade, that's when things can go south, or if I'm watching the market. Early on too in your trading career, you make mistakes where you might be watching the chart or the 1 minute chart, whatever, and you think the market's going to turn around, so you take off your stop loss, and then the market doesn't turn around. It can go south really quick. So have a couple of those, and you learn pretty quick to not take off your stop losses. So I think that's really been the difference with me lately, or the last year and a half, has been mentally just being smarter and trading, taking the trades each day. And if you have a losing day, then just move on to the next day. So usually Iron Condor. Sometimes they open up some short puts in the MES, which is the micro E-mini S&P futures. And then I have some hedges that I put on. Usually those hedges I put on at one trade every 2 weeks or so. Those are longer dated hedges as well. So, during the day, I might be in front of my trading platform for maybe 20 minutes. I'll check it during lunch and stuff like that. But like I said, I'm a full-time trader, so I'm not staring at screens or charts all day, or day trading, even though I'm doing the 0 DTE thing. And I did start with the Iron Fly as well. I found for me that the Iron Condor fits my personality better. So I've done that. I made money, lost money, but it didn't work that well for me. Or it didn't meet my personality.
All right, so you're like you said, you have a full-time job, and trading would be your secondary income source then, I guess, or your secondary place of employment, for lack of a better phrase. So, and you said you enter the 0 DT right at the open, set your stops, and walk away. Like, do you not? Because I trade 0 DT primarily, and it can get very brutal very fast. So, like, how do you juggle, I guess, a 40-hour week job plus trading with knowing the risks that are 0 DTE?
Yeah, that's a good question. So, you could either do stop market or a stop limit order. Stop market order guarantees you get out, but at what price you don't know. I do a stop limit order, and I do a 40 cent spread between the trigger and the stop limit order. And I started this after COVID, so during the COVID crash, I don't have any numbers, but since then I've never been blown through. But I also have alerts set up on my phone through Thinkorswim. So if the market is moving quickly, it sends an alert to my phone. And at that point, I take a look and make sure that my trades are okay. And also, you can set up alerts. So if your option price is or your stop limit is, say, it is at $3, you can set an alert to send to your phone or email on the Tastyworks platform if that option moves to, say, 350. So if it goes to 350, you can get alerted on your phone and make sure that your trade actually went through. And one thing I will point out, there are plenty of days where life gets in the way with family or with work. I have to be on site sometimes. And if I know I'm not going to be in front of my computer or not have access, or if I have meetings all day, I'll just skip that day. And I'm totally okay with that. It sucks not being in the market every single day. I like to be, but sometimes you just gotta, if the risk is too high, I don't put on the trade, and I just move on to the next day.
Well, something interesting happened to you last week, right? I remember, I think I saw you post something where you had your short put and your short call on, you had your stop set, and then volatility just jumped and premiums jumped, and you actually got stopped at both sides at the same exact time.
Yeah, that was something that's never happened before. I think it was on Friday, but yeah, my short put and my short call, I had stops on both of them, and both of them closed at the exact same second. And there were multiple strikes where the option prices just jumped like crazy. Um, and so I tried to reach out and figure out what happened. And it seems like there was some really high volume order that went through and just kept pushing the prices up, and the CBOE couldn't um, get a handle on it quick enough. But I tried to get the trade busted, and unfortunately, I didn't get the put side busted, and the call side got reduced by 80 cents. So I saved myself $80 a contract, but it was still a double stop out at the exact same second, and it was very odd. I've never seen anything like that before. But that's why you gotta trade small, and if you have a double stop, it's not the end of the world. Um, just move on to the next day.
I was going to ask you if you reached out to Tastyworks about that, or was that something on their platform? Because I know that their stops are triggered by the last trade, whereas like you mentioned before, TD Ameritrade or any other brokerage, well, most other brokerages, I should say, will let you determine if you want to trigger on like a stop or on a bid, ask, mid, And I know that Tasty does it on the last. So what was their response? Did they turn around and say it was CBOE?
So I've reached out to Tastyworks two other times. I've had some bad fills on SPX where the price just jumps from say 5 cents to $5. Um, the CBOE has a certain bid ask spread that they have to maintain. So the two other times I reached out, I was able to get the trade busted. So Tastyworks actually reached out to CBOE um, and got those trades busted. So this time they also reached out to the CBOE, but they said that the put side fill was valid and that the call side should have been 80 cents less based on their bid ask spread. So they did adjust um, that call side, but it was all on the CBOE end. And I know other brokers had the same, um, or traders with different brokers had the same issue. So I know Thinkorswim, Interactive Brokers, and E-Trade all had traders on my Discord had reached out and said that they had the same sort of thing happen to them on the same couple strikes at the exact same time. So it seemed like it was a CBOE thing. And I think it was just a high volume order that came through and pushed all the option prices up really quick.
And for anybody that's listening and doesn't understand what we're talking about, so the CBOE is they are the sole provider of SPX options, and SPX is the index of the S&P 500. Last week there were some big movements in the market that triggered some stops with a lot of slippage, and essentially when Ben says that they're busting the trade, sometimes the fills are just bad. So what happens, or there's a discrepancy in the bid ask spread that triggers stops on other brokerages, and what they do is they'll bust the trade, which is essentially reversing the trade. And it's funny though, because you're right. I'm in a couple of different communities that, trading's a lonely job. So I'm in a lot of communities that chat with people, and I seen this major candle. I think it jumped to like $10, and it hit. It triggered a lot of people's stops. And talking about Wall Street bets, it's funny because the guy, like, it was funny to see the other side, because there was a guy on there that bought some contracts for like 85 cents, sold them for $5, and then whenever the CBOE busted the trade, they gave him back his longs at like 5 cents, and he couldn't sell them; they were worthless at that point. So it's one of those things where it's like trade busting is, I think it's debated, because there is someone else on the other side of that trade. So like while your price has got improved, like someone else has got deduced.
Yep, that's a very good point. And I've actually started. Today was my first day. Actually, so my call side got stopped out. And I had traded some other entries during the day over lunch. But I had a leftover long put at one point, and I it was like 100 points away, but I set an order in for 10 cents, and it got filled with 7 minutes to go, and it was super far away. So I mean, it was just an extra $10 that just because I put in an order, just because.
Yeah, I've tried that before. Actually, whenever that $10 stop out hit, I was like, well, what? I'm just gonna start setting like just resting orders for these crazy wicks and hope for fill, like almost like lottery tickets. But TD Ameritrade has restrictions on how far out you can go, so it didn't prove to be very fruitful.
Ah, yeah, that's a good point.
So yeah, just kind of going fishing. So you said you focus primarily on zero DTE. Do you do anything longer term?
So I do some MES short puts in the 60 to 90 DTE, kind of the David Sun um, method that he has, um, or similar, I guess. And just part of that is because I'm net short the market with my hedges, and my hedges are in /ES, which is the E mini, which is the larger option or the larger future compared to MES. So the MES puts are kind of just to keep my deltas not as short. Um, so those are kind of the main trades that I'm doing right now. Last year, uh, with the market going up, I also did some bullish strategies, but I have not done them at all this year because of the down market. But obviously, the last couple weeks, the market has gone basically straight up. It seems like. So I've done some other strategies in the past, and I plan to do that again once we get kind of into that bull market feel. But right now, with it being so in flux, I haven't put on those directional trades really.
I hear you. I just feel like there's a huge disconnect. Like I'm not gonna ever claim that I'm like a professional in economics or world affairs or any of that, but I just feel like there's a serious disconnect between the price action of the market and what I see in my everyday life.
Yeah, I feel exactly the same way. And I know after the COVID crash, as I was starting to go up, I was short the market basically to the top, and I lost, or I shouldn't say I lost money, but that particular position was down tremendously just because the market went straight up, it seemed like. And every day it's okay, no, it's got to come down and then it'd be up 1%. So, it's that's the other part that I've learned is you kind of have to not think when you're looking at the market. I've also tried the TA, but is that's not for me. I'll leave that for Chris Grigson at in the Tasty Trade options world. But um, you know, I I've had my thoughts on what the market should do. Whenever I trade based on those thoughts, I was always wrong. So to me, I'd rather just be uh, directionally neutral and just let the market do whatever it does.
Yeah, I feel like this run up is may even be a side effect of the COVID recovery. Like I feel like there's been a lot of retail traders that flooded the market, and I feel like there's like they almost think that history is going to repeat itself, and we're going to get that, hits the bottom and then go straight up back to where it was, to all-time highs, and it's going to be this V-shaped recovery, and everything's going to be good. But again, it's just I think there's other pressures in the world that we haven't really felt the full effect of. But again, I don't even know what I'm talking about when it comes to that stuff. So I can't even give a good opinion. You mentioned that you try to stay delta neutral. Do you have any other tools that you use, or is it just like 9:30, the bell rings, I'm going in with as much premium as I can get and taking what the market gives me?
So I'd say I use about 50% of my buying power for some of the longer dated stuff, mostly short puts and long dated hedges. At this point, like I said last year, there was also some directional trades. Um, and then with the other 50%, I usually take about um, 80% of that, so about 40% of my overall account, and I'll trade zero DTE with that kind of remaining funds.
And then what role you had like we were talking earlier and you said about that you do have a full-time career job and this is kind of like a side hustle type of thing. What I was gonna say, what kind of role does trading play? Is it like fun money for the family, or is it kind of like to accrue shares? Or like what role does that secondary activity play in your life?
Yeah, so I would say that all the money that I started with initially in the market was, I would say, fun money or, funds I could afford to lose. Um, and, since I have a full-time job, I'm not taking any paychecks out of my trading account. I'd rather have it grow while I don't need the income. And then hopefully that account grows significantly over the next 10, 15 years. And then at that point, I can start drawing from it. But, one of the biggest hurdles to trading is capital. And when you're first starting out, you don't usually don't have the capital to just go all in, and make $1,000 a day or whatever. So that's kind of the main goal is just to build that account so that hopefully someday in the future I can start drawing from it and not having drawdowns.
And then so you let it kind of compound. Do you adjust your sizing based on your account size?
Yeah, so like I said, I try to use about, you know, it depends on where the VIX is at. The VIX has been pretty high, relatively speaking, the last couple of years. So I've been closer to the 40 to 50% mark, kind of for my longer dated trades. If VIX is low, then it might be around 30%, 25%. But then the zero DTE, I use about 50% of my account. So depending on what my account size is, I'll trade that many contracts in SPX.
Okay, I got you. So are you basing it on your kind of like a return on buying power, or do you view it more as like your net lick?
I think of it more as net lick.
And then you said that you're at work. So do you bust trades out like on like a on a computer, or are you just kind of tethered to your phone?
So I have a personal laptop. So I actually work from home. So I have a personal laptop that I have on the side. Um, so I use that. And then if I am out on site, I'll have my phone as well. But I find it a lot easier to use the desktop version.
Okay. Okay. Yeah. I think that's a common question because there are, like you said, the startup capital is tough it's tough starting out unless you have the capital. So a lot of people that are probably going to listen to this are sitting at a desk somewhere or trying to juggle both at the same time. Do you ever get questioned about your trading, like in real life, like outside of your trading persona online and people that know you through trading, but do you ever discuss it in the real world?
So a couple people um, I discuss markets with or options trading because they know about options trading or they want to learn more about options trading. But the option trading world is kind of a special niche. Not a whole lot of people know about it, even if there's investors in the stock market. It's buy and hold, collect the dividends and whatever. Option trading is kind of that specialize in stereotyping is the gambling. Options equals gambling. So not a whole lot outside. maybe a couple family members and a couple friends that I discuss it with, but um, outside of the communities, not a whole lot.
Yeah, it's interesting because that was actually a question that someone had submitted on the Facebook group, and they were asking how do you explain it to others? And coming from someone, so I cashed out of crypto at the 2017 bull run, and for 4 years I was a genius, right? I hit the top perfectly, almost perfectly, and everything was great. And then, everybody knows Bitcoin ran up to like 60,000, and finally I was an idiot. But I took all that capital, and then that's when I started learning like investing and trading and options and stuff. And it's weird because, like I said earlier, that trading is super lonely compared to an office job, and like I make a good bit of money, but I don't really. I don't want to say I don't do anything, but I don't do anything. I'm like clicking buttons on Thinkorswim from like a 20,000 foot view. I look like I'm just pushing buttons on a screen and printing money. And so I think that's a common hurdle for people to jump over, if they're trying to rally support from their friends or family or spouses or whatever, is how do you explain it to them in a way that they understand it? Because like my wife, she's not from a financial background. So I will I had to break it down and kind of explain it to her in words that she could get like in a scenario that she would understand. So yeah, it's a common question is how do you discuss it with others that maybe are not familiar?
Yeah, that's tough, and it kind of depends on who it is too. Like some of the more traditional people might think of it as gambling, or if you place a trade and you close it the next day, or you do zero DT, they might think of it as day trading. But what I think of day trading is watching charts all day and buying a futures contract or a stock outright, um, and buying and selling based off of price. Um, one thing that's pretty common with the premium selling world is kind of the insurance company metaphor. So I've used that as well to kind of explain, the methodology that I use. Um, you know, the insurance company versus, most people just think of stock price, and you can either buy or sell it, and you only make money if it goes up or down. But in the options world, there's you can get more complex. Um, so that's kind of how I've explained it too.
Okay, I got so do you have or do you trade whenever you're like if you go on a vacation, would you still trade on your vacation?
I think it depends. Um, I think I would say generally no. Um, I with COVID, I don't think I've really taken many vacations, or at least week-long vacations. Sometimes I go up north to Canada, and then I have no cell service for a week, so I can't trade. But I for me trading, there's whatever 252 days to trade. So if you take a vacation, if it's a week or even 2 weeks, that's 10 days. For me, I'd rather just forget about it and relax. Especially if, what if you put on a zero DT trade and you forgot to put on your stop loss, or you got blown through, your stop got blown through, and then at the end of the day you had a big loser. That would just put a damper in your vacation. So to me, it's just kind of, think of it like a job. So when you're on vacation, just kind of set it away and come back to it after vacation.
And say if the right stop comes through, you might have to cancel the vacation.
Exactly.
Yeah, so the follow up to that was another Facebook group question, but that was the follow up to it was how do you deal with the opportunity cost of losing the money that you could have been making, but instead you decided to sit on the beach.
Yeah, and so this is the other thing that kind of helped flip the switch for me. Going from a more of a break-even average trader to a profitable trader, and that's focusing on how much you can lose rather than how much can I win. So much of trading is holding on to the capital you have and mitigating risk. Obviously, you have to make or you have to take risk to make more return, but you have to balance that. You can't take so much risk that if something goes south, then you blow out your account. So, thinking about how much can I lose today is a better thought for me compared to how much can I make today.
Yeah, and that's what was that's when it changed for myself as well, is that it was risk management. Whenever I really like, I don't know, I can't, like I said, I came from crypto and then I did the Robinhood thing, and I kind of had this, you know, stops are for pussies and whatever, right? So how I guess when it really clicked on options was when I started to really look into the risk side of things, not how much can I win? Can I flip this long contract and 1,000% gain? It was, let's not let these contracts, turn against me and end up blowing up my account. And it really is about capital preservation. I think that's whenever you mature as a trader, is whenever you start looking at the potential gains and you start reducing your potential losses.
Yeah, well said. It's so much about trading is the mentality part, and the other part too is when I first started out with zero TTE, it was so easy if you get stopped out to kind of do the revenge trading where, oh, I got stopped out, but now I'll sell two more contracts because I got stopped out on one because I want to make my money back, but then the market keeps going and now instead of a 1x loss, you're at a 5x loss just because you revenge traded. So, doing that revenge trading or over trading too is something that I've had to, earlier on I it was harder for me to not do that. But now mentally, I know that's just what you have to do in order to survive in this world.
Yeah, I think that there's no way that my short put or short call is going to go in the money, is like the famous last words.
For sure. And what people don't understand or don't really realize is even if you're selling a 5 delta put or a 5 delta call, the approximation is that two times the delta is the probability of touch. So there's about a 10% chance that the market touches your 5 delta put or call, and a 5% chance that it uh, expires in the money, and probably a 1% chance that it just completely blows through and completely demolishes your account. So that's when you think of 5 delta, people think, oh, it's never going to go in the money, but yeah, I mean the probabilities are 5 to 10% it will.
Before we jump into these questions I have, and real quick for the people that are listening live, the unique aspect of this show is audience participation. So if you have any questions and want to come up here and jump on the speaker, I can just raise your hand and I can give you speaker. Or if you're, and that's only works on the phone though. If you are on a desktop and you want to ask a question, shoot me a DM and I can ask Ben. And and I'll give you guys a couple seconds here to think about if you have any questions. Before we jump to the questions, Ben, do you have any advice or guidance or anything like that for someone that is interested in taking the leap, getting off of Robinhood, becoming a legitimate potential trader, and kind of just leaving the bananas in the jungle and giving up that apehood,
Yeah, I mean that's kind of a loaded question. There's not really a singular answer. I think, if someone's learning to trade, I think so. A couple things I'm going to touch on is one, everyone has to find what works for them. Just because it works for me or works for someone else doesn't mean it's going to work for you. You kind of have to find out what your trading style or personality is and trade strategies based off of that. So, like I said, the iron fly, a lot of people had success with it. I had success with it. Sometimes I made money, sometimes I lost money, but it just didn't fit my style. So I moved on from that strategy. Doesn't mean it's a bad strategy. So that's the first thing. And then the second thing is, for the first couple of years, don't focus on the money, focus on the learning, focus on uh, how the option prices or a certain strategy moves as the underlying moves. As long as you are being consistent and uh, having that risk mitigation, the money will take care of itself in the end. So, for the first couple of years, don't think about money. There's so many people who jump into trading and think, "Ooh, I just started trading last week. I'm going to quit my job and trade full time and make 10 times more money and live happily ever after." But that rarely works out. So, focus on learning for the first couple of years. Don't think that this is just a free money machine.
Awesome. I couldn't agree more. I think it is all about finding your style. Whenever I got into this, I was attracted to the iron fly. You'd be out within an hour and a half, 2 hours for whatever your profit target was, or if it hit your stops. I took one brutal stop out that when it touched, and that was enough for me. And I went back to the drawing board. I don't like the longer dated stuff either because of like the overnight risk. COVID and the world shuts down, and you're underwater, or Russia decides to invade Ukraine, and you're underwater, and like it's too much stuff that can sway things against me that I have no control over.
Yep, that's a good point. And one other thing I'll add is, and this is more of an advanced tactic, but looking at your overall portfolio and seeing how it would act in, a doomsday or a black hedge or a black swan event where, how are you sitting? Can you handle that risk if you're doing long dated options? So I actually took a look at that, and I have different hedges that I put on. They're income generating hedges, I call them. So, I put on the hedge, and if everything goes just fine, I'll make money. It's not really a drawdown on the account. Uh, your main risk is kind of the initial setup. Um, if you set it up and the market tanks tomorrow, the hedge isn't really going to work out for you. But I'm into the hedge now, so it's kind of a a free hedge. I would call it. Nothing's free though, but having hedges set up for different scenarios on this grind down market from the beginning of the year until a month ago, my hedges were working perfectly. Um, I have hedges in for a slow grind down, and I have hedges in for the crash scenario. So having that to protect your portfolio helps you sleep at night as well. If you don't have those set up and you're just selling short strangles, you know you can have the COVID thing happen, and all of a sudden you're underwater and you're not looking good. So thinking about hedges when you don't need to, like when the market's just going straight up, that's the best time to put on hedges. Um, and hedges are kind of uh, some people have like black box type things, or people don't want to think about it. There's a lot of different ways you can hedge too, and with that, using a back tester sometimes is helpful. One thing with a back tester is it's just looking at historical data, so it's not a guarantee of how it's going to work in the future if there's a similar crash, but it gives you a good idea what would have happened. So I've also used some back testing, which I didn't use earlier on in my trading career. And back testing, I use it more so as a checker to make sure, hey, the strategy does have legs. It's not a losing trade over 10 15 years, so it is viable. Don't look at the specific, oh, if I would have done it, I'd make 12% each year. Don't think of it that way, because you don't know what's going to happen the next 5 years. But if you're making money, or in the back test, if it's making money, then it's probably a safe bet to try it out in your own account.
Yeah, I think there's a common phrase. It's like people don't buy hedges until they need them.
Yep. And most of the times, people can hedge different ways. Some popular ones that I've seen that I don't do, but I don't think they're bad, is buying VIX calls or buying long puts. Um, the best time to do that is when the VIX is low and market's going up, because those options are cheap. But once the market starts to tank, the VIX jumps in price. So if you buy a VIX call, then it's going to be really expensive. Or if you buy a /ES put, then it's going to be a lot more than it was a couple days ago.
Right. All right. So we got Deb is requesting to speak. Okay, Deb, you have the mic.
Hi, Deb.
Oh, hey, thanks for taking my questions. So this has been really, really helpful, by the way. So thanks for hosting this. My question is, Ben talked about risk management and stop losses. And I'm wondering, Ben, on the flip side, do you also protect a profit? Do you do a stop once you hit a particular profit target?
So for my longer dated options, I do. And main reason is for those, I want to capture profit before the gamma risk goes increases, and basically that's a fancy word of saying your directional risk, basically. So with the longer dated options, I usually take profit around 50 to 60%, and that might be 3 weeks before it expires. For the zero DTE stuff, I personally let it expire. I know plenty of people that take profit when it's, say, 5 cents, an option's 5 cents, or 50% or 60%. I think that's fine too. There's pros and cons to both, so I have nothing negative to say about that, really. There's been plenty of times with the zero DTE stuff where if I would have bought the option back at 5 cents, I would have avoided a stop loss. But there are plenty of times where if you bought the 5 cent option, it would have expired worthless. So for me, if I'd rather let it expire worthless and let the probabilities work out, compared to, if you're buying both the put and the call for 5 cents each, that's $10 plus fees and commissions that you've left on the table, essentially. So it kind of depends on the strategy for profit taking, but hopefully that answers your question.
Yeah, it does. It does. And yeah, for me, I'm still under PET. So I just started doing the zero DTE with the E-minis. And I do try to let it expire because the commissions and fees are so high. So I was curious how you did that. So thank you.
Yep. And one thing to look out for the E-minis, basically anything that's not SPX is not cash settled. So depending on how much money you have, your broker could close you out early. Obviously, with the futures, you don't have to worry about day trades, though. So you're okay there.
Yeah, thanks. I did ask Thinkorswim about assignment. So I think I've got that down. I just have to close if it's in the money. But anyway, thank you very much. This was really helpful.
That was
Awesome.
actually
Thank you.
That was a really great question too, because and it's also I think it's a topic of like heated debate. You go into one of these Facebook groups and start talking about early closing versus letting them zero DT specifically closing at a profit target versus running to expiration, and you'll have 30 conversations going of people just arguing back and forth over who's better and what's better. It's kind of like stop limit versus stop market.
Yeah, good point.
Awesome. Thanks, Deb. Is there anybody else that also has a question? I have one more question that was submitted via text. Is there anybody that is live here now, though, that has a question?
There was one question in the Discord, just asked me if I had an LLC or trader tax status. I do not. I don't have really I don't make enough trading where, I would need to set up an LLC, and it's not my primary source of income. But good question.
That's also a very common question that I see a lot is tax trader status, LLC, um, anything regarding taxes and trading. So my other question I have here for you is I think it's regarding win rates. So the question was, a trader unnamed posted a screenshot in Facebook. And he was talking that a single trade consists of a spread. So one iron condor equals 2 trades, and that their percentage rate is 80%, but their winning days is 60%. I'm trying to figure out. I think they want to know if it. Oh, okay. Yeah, Ben, in your opinion, is 80% probability a decent expectation to have for making money?
Yeah, so we touched on this a little bit earlier on, but it really depends on what your profit taking and your stop loss is set at. So if let's take an extreme example. Let's say your win rate is 99%. If that 99% win rate, if you're making, say, call it $1, but your 1% loss was $500, that would end up being a losing strategy in the end. So it really depends on what your profit taking and stop losses. So it's kind of a loaded question. You kind of need more variables on that. I know with my 5 Delta Iron Condor, I set it up the same way where I treat each spread as an individual trade. So it's basically 2 trades a day, and my win rate's around, I haven't checked lately, but it's usually in the 75 to 80% mark. And kind of have the 60% winning days. That's probably what it would end up being. And how I get that is being a 2x net loss. So if I take in $1, my stop loss is at $3 for a net loss of 200 or $2. So if once I get stopped out, I'll have a net 1x loss. And I kind of like that because the next day, if I trade and I win, it makes up for the loss from the day before plus some extra. So that's what I use is the 2x net loss, which is kind of popularized in the 0DTE world.
Oh, I'm sorry. I was muted while I was talking. So what I asked was, whenever, to clarify, your win rate is for your spreads, correct? So like your put side is 1, your call side is 1. So if your put side was worthless and your call side got stopped, that's 50%.
Right.
Okay. Yeah. And I want to touch on the win rates too, because this is interesting. And I think it's important for people to understand because the internet is a place of liars and craft with words. So, for example, and Chris is going to love this story. I was exploring the idea of starting a hedge fund. And I started calculating my win rate. So I have my spread win rate, my strangle win rate, and my daily win rate. And the whole idea of it is, so my spread, for reference, my spread win rate is 76%. My daily win rate is 60%, and my strangle win rate is 55%. And the way I viewed it was, if I was going to start this hedge fund and I was going to go and sell it to potential investors and have to talk about numbers and stuff like that, it would all depend on the personality. So I had a guy that was interested in kind of, I don't want to say mentoring, but kind of coaching him in trading. but he was like degenerate crypto, like let's leverage everything we can. So obviously I'm going to sell him the 76% win rate. But if I was going to go and talk to the more conservative investor, I might want to go for more the 55% win rate. Like I don't have to win all the time to produce these same numbers. So you always want to be careful on how people are selling their statistics, I guess, whether it's for clout, whether it's for another, they're trying to raise money for a fund or whatever. It's always beneficial to stay cautious whenever people are talking numbers.
Yep, that's a good point. And so one other thing I wanted to touch on too about, what kind of helped me turn the corner is tracking my trades. So I actually track my trades, and for the zero DTE Iron Condor, I actually have that posted on my website, so you can see all my real life trades, both what the fill was, my stop option, the stop trigger and the stop limit order, and then what I got filled at if it did get stopped out. And so I have all that information on my website, along with the net P&L, the win rate, which I just looked at 75.9%. This past week, I've had 5 stop outs in the last 5 days, actually 4 trading days. So that's really brought down that, not really brought down, but it's lowered my win rate. So 75.9% win rate. And another thing that David's son has kind of talked about a lot is the premium capture rate. Basically, what can you expect to keep out of whatever you sell? So if you sell a spread for $1, if your premium capture rate is 30%, you can expect to keep 30 cents of that over the long run. And my premium capture rate is 29.3%. So right there with the 30 cents. So if I sell $2 in premium each day, in the long run, I can expect to keep 60 cents of that.
And I think that the premium capture rate, and I think what Deb's question regarding early closing, I think it would be a good exercise for Deb to go and play with the numbers and see how early closing affects that premium capture rate and win rate in general.
Right. And I like the premium capture rate that David's used. And for those interested, David's son has a podcast. It's the Trade Buster podcast. It's really good. It's very informational. But I like the premium capture rate because it kind of involves everything. If it's a net positive trade over the long run, your premium capture is going to be positive. And if it's a losing strategy, it'll be a negative number. So it kind of incorporates all of that information into one variable.
Yeah. And actually, David will be on the show here. I think it is on the 29th. So if you want to hear more from David specifically, follow me, follow Speaking Greeks. I will be putting it out there as soon as we finalize the scheduling. But if there are no other questions from the live audience, do you have anything else in your Discord or your Twitter or anything? Anyone asking questions?
No, I just had the LLC question.
All right, so then I will give you a moment to carry us out here and let people know where they can find you.
Yeah, so my website is IncomeOptionsTrading.com. I got a lot of good information on there. I have some white papers that I have on my Iron Condor and Iron Fly strategies that I use, the zero DTE strategies. I also offer one-on-one coaching if that interests you. I know some people like to learn, over video chat, one-on-one. They might find that more beneficial than a YouTube video or something like that. And then I also have my YouTube channel, which is Income Options Trading. I have quite a few videos on there. Pretty much all the strategies that I use, I do not disclose what my hedges are. Mostly, main reason being is they're, I would say, more for expert level traders. They are not risk-free hedges. you can actually lose money if you don't know what you're doing. So I don't offer those, but I could do that during a one-on-one. But IncomeOptionsTrading.com. If you have any questions, you can reach out to me as well at IncomeOptionsTrading@gmail.com.
Awesome. And then I will also include all of that in the URLs and everything in the podcast description, the episode description. I will get all this probably pushed out to your favorite podcast platform tonight or tomorrow. We are on Apple, Google, Spotify, Amazon, and Anchor. Do you have anything else, Ben?
No, I appreciate you having me on, and pilot episode. Hopefully everyone enjoyed it and learned something tonight. And thank you again.
Hey, man, I appreciate you pioneering this with me.
Yeah, happy to be here.
All right, man. Then I guess if everybody else is done, I'm done here, and I will catch everybody here in the next couple of weeks with David's son. Thanks again, man.
Yeah, thank you.